Good afternoon here. Happy Family Day, everybody. United States, Canada, everybody who's got a holiday. Wrapping up a week 2 Forex FTMO trading review today. I want to talk about a couple things. One is obviously the week that I just had, a little bit about FTMO itself, the challenge, the rules, things that you have to follow, things that you have to look out for in order to successfully pass their phase 1 and both phase 2 challenges for you if you're using that prop firm. And then we'll dissect the charts a little bit and get into what I think the week has for us in store and see if we can come up with a couple biases, couple opportunities, and mark up some zones to have some interest looking forward. First and foremost, let's actually get into the FTMO challenge itself. So this is phase 1 of the FTMO challenge. It requires me to make $10,000 trading capital. It's a $100,000 trading account, so 10% of that. My max daily loss is going to be $5,000 here. Currently sitting at $1,292 loss, 1.29%, and I'm currently at $1,643.45 profit, so 1.64% up on the account. Now that was not far off my week 1. Which goes to show that week 2 was not very profitable, not a lot of money to be made, and we'll get into the reasons for that shortly. If you guys do trade with FTMO as well, you got to be careful looking lower here at some of these statistics, your average RR ratio, profit factor, lots, etc. Because when you close partials here, when you secure positions, it tracks that trade down as its own separate trade. So I can guarantee you on February the 13th here, I did not take 17 trades. I might have taken 2, 3, 4 even. Let's say it was an overtrade day, but closed 50% at break even, or 50% in profit, or at a loss, etc. Maybe I did that a couple times. That's going to mark as 2, 3, 4 trades in one trade idea, or one trade that would normally be registered on your own account. So just be careful when looking at these statistics. Make sure you understand how FTMO gathers the data and breaks it down. Otherwise, things like profit factor, win rate, trade sizes, lot sizes, those are going to be a little bit inaccurate, or at least a little bit misleading for you in that regard. So getting down to the statistics of where I'm at, like I said, I'm at $1,643.45 into the $10,000 challenge for week 2. So entering week 3, not necessarily where I want to be, not where I could have been. As you can see from this graph, I was closer to $3,000 early in the week, and even later in the week, almost cracking that $3,000 mark. So we'll get into kind of the emotions and what caused me to start to go backwards towards the end of the week. So for now, let's look at kind of my week in review, how I analyzed the charts, what I saw, and what I was trying to take advantage of. So Sunday 9th, here we are. Last Sunday market open, you got this really nice Asian push, bullish move, couple hundred pips, 400 or 500 pips, all the way to 700, 800 pips here, straight and steady 4-hour candles, Sunday market open. So not typically a session I trade. I would trade Sunday night here at about 11, so London open, that candle. Let's break it down into the 1-hour time frame and see what I was looking for. So like I said, Friday bullish, Sunday continuation Asian session. Here's where you start to finally get a little bit of that structure. You've created a high here and created a low. This is actually coming into the New York session. So London session just pushed all the way up. So we broke these highs. Let's see if we have anything to the left of us at this time, or if this is all-time highs essentially. Yeah, cracking into these all-time highs. Okay. Difficulty about all-time highs is there's no structure, there's no looking left, right? So You have to use psychological numbers, whole numbers, round numbers, or at least devise a plan of attack that has worked for you if you've ever experienced all-time highs or areas that price action hasn't entered before, hasn't entered very recently. Nothing, no structure printed. London session on the 1 hour, dropping down 30-minute. Not a lot of structure. So you have to wait until you do get that structure here to see how you can execute the market. So here's your kind of high and low, 29.10 and 2900. My shorty has entered the chat team. She is here. Hello. How are you doing? What's that?
I said, oh, you closed those on purpose?
Yeah, I did. Yeah, sorry. She likes a little light in here, but sometimes she don't get it. Okay.
We made big money. So sign up for the course.
Sign up for the course. My little plug. Don't have a course. We'll get there. Okay. Not a lot of action on the London session. What you can do is take this position here. Again, you don't have that high to attack. So essentially, once you get this bearish close, you're looking for this candle here at 12:15 to 12:30 because it essentially pulled back and showed you direction, showed you where it wants to go moving forward. So that would be a position I would call a retest play, and you can aim for the highs here. Again, you don't have highs to aim for, so once you're in profit a little bit, put your stops, break even, let the position ride, secure profits kind of thing. So here we get into a little bit more of a range for New York session. Now you have a little bit of a high and low that you can work with. 1-2 hits to a low at 6 o'clock. Push to the high, we come back down. We can't close below this low. This is our third reaction here at the 2900, staying above. So you would start to look for buys in here, expecting a break above or at least a retest to these highs. So learning to enter at areas of interest, strong areas of interest, price points that have failed to break or acted as supports or resistances before is very good and a very good starting point to look into. Let's fast track a little bit through the week. A little bit more structure to work with here. Let's fast track through the week and get into some of my more emotional trading days that I saw. We were here, let's go like this. We were here. This is Thursday, 13th, February this year. Asian session, 7 p.m. here. We got a retest to this structure that was previously broken. So you have this impulsive push above. You've started to come back, retrace, test, retest structure that was broken at about 29.20s, 29.24s, 25s, that price point. So once you have this retest, closure above, dropping down on some lower time frames, I was looking at buying here. Unfortunately, didn't get a bottom wick on this 8:15 candle now. Typically, candles have bottom wicks, top wicks, so playing the probability there. I don't like to enter in the first few minutes if it doesn't provide me that top or bottom wick. So sat on my hands a little bit, and classic gold ended up scootering there. So really good analysis on the market. I felt like the last 2 weeks I really could predict where price was going. Definitely on the higher time frames, but unfortunately entering in the lower time frames and having those scalp positions, I got caught at break even a lot. I got caught hesitating on the moves. I even got caught later in the week being a little bit more frustrated from getting stopped out, holding larger stops, getting stopped out, things I would normally do due to the frustration, due to the greed, that kind of thing. So ultimately, here were my minor zones. We got this, finally a manipulation down to retest these lows and a flip all in the 15-minute candle. So gold does act very fast. A closure above. I entered here. We got that first initial push of I think 20 pips, 15 to 20 pips. I went break even. flipped, stopped me out, and then started to drive again. So that was one position where I got stopped out, break even. Pushed all the way to 29.35s. That was my first initial higher time frame TP. Unfortunately, wasn't in that position. Ended up re-entering in here, getting caught in this little bit of structure, this manipulation. Right? You have a bearish candle closing weak. A lot of the times I can see price moving up first, flipping and driving down. Right? So this candle in 30 minutes was 40, 50, 60 pips in volume. But it would have to be on some pretty lower time frames in order to catch that and hold positions. Essentially last week, just, got caught buying in here, got stopped out. Would enter here, not secure any positions, stopped out at break even. Missed this retest move, entered here, got wicked out on the stop there for that continued push. Like, just the timing for me last week wasn't where it needed to be. A little impatient, a little eager. Got caught looking at the lower time frames too much for both my entries and my targets. Once you enter on the lower time frames, definitely zoom back out. Understand the higher time frames, or at least understand that every position essentially is a scalp until it is trending so far in your direction, right? So I don't have my stops at a higher time frame area of interest. If I'm entering here, I know this 2420s, 2920s is my higher time frame retested support structure. I'm obviously not holding 100 pips. I have to hold something on minor structure. So therefore that is something that gets retested a lot more often. And I have to know that I have to this week moving forward, secure my positions earlier, understand that I'm essentially scalping gold session, London session, New York. So multiple entries, and I have to take the wins that are given to me. No one's going to be upset with a blue day, no matter how big, no matter how small. So there's always another trade. Secure your profits early. And if you get stopped out at break even, be able to sit on your hands, be comfortable, or move on to the next day. What else do we got? The greed, the frustration, some over trading, understanding the higher time frames. Let's get out of this replay mode for us a little bit. Let's clear the drawings. Let's look at this higher time frame. So this is what we have now. Gold obviously is super bullish still. Just experienced kind of that Friday sell-off from all-time highs. Getting a little bit of tricky price action here, or at least structure on the daily time frame. A little bit more clear on this 4 hours. So we know that the 2880s is a decent support zone, a decent area of interest for price action here. We broke that structure, we came back, we retested, and we extended into the 2940s, creating that new high. We have now snapped back below these other 2900 price areas of interest, down towards our 2880s again, and have a bounce off there. So essentially what needs to happen if you're looking for those sells is maybe even getting a bit of that manipulation above, fake out if you will, retesting here, and to drive down. Again, this is going to be your area that needs to break in order to then continue down even further to these lows. This also, as you can see, created a support, and if this candle continues to close bullish, it's going to confirm that support. So this range here might be a new kind of 100 pip range for you to trade. So if you're taking sells from this 2905, 2900s, you have to be sure that this is going to break. If not, it's going to come back higher. So that is your first area of concern, and then your second TP down there. Obviously a lot easier to analyze on the 4 hour and higher time frames. Entries are another challenge all in itself. So that is your potential for some bears, because we got that snapback. No break of this daily low yet, just creating structure. Also be aware, we have this impulsive move. We've retested most of it, We could even come up a little bit higher to retest this area in 2920s that we fell from. So not a lot of structure, not a lot of orders have been collected for downside here. So this is the range that we're currently working with now. This 100 pip range, 2905, 2895. Wait for some structure. Ultimately, last week closed bullish, but bullish looking more like a rejection. And what I mean by that is your wick of 600 pips is 2 to 3 times greater than the body of the candle, the strength of that candle. So there's a lot more rejection later in the week than there was a bullish movement. Something like this looks like a strong bullish candle. We expect a continuation, and you get one. Something like this candle here could look like a pretty good rejection. And let's draw some candles. Could very well. Ooh. Yeah, that's a tough thing about drawing it on that time frame, eh? Let's go back. Let's zoom in a little bit for you guys. You could very well get something. Yeah, that's the what I want. That looks like that. For tomorrow, once bank holiday times are over, or at least this London session volume enters the market for tonight. So you get this retest here at the 2910s, and then a fall down to these areas of support around your 2850s. One option for you guys, just like so. Very reasonable would be also that daily or weekly wick on the weekly candle for the downside, so your bottom wick would, just like so, respect structure, retesting the top of that resistance zone that has been created. Failure to break above, you're kind of retesting once here, reaction, retesting a second time, and a drive. So it makes a lot of sense there. Let's get rid of that. In order to see a little bit more bulls, I'm going to need this structure to be tested at least again, if not even this 2880, and look for that continuation on the weekly candle. So waiting for a little bit more structure to be formed. Let's quickly talk about my strategy and essentially what I'm looking for. First things first, I'm going to identify the trend, whether that's overall trend, intraday trend, intra-session trend, if you will. As we all know, I trade gold. Gold's been very bullish for the majority of the weeks. I look for buys. I look for price to come to my entry or break out of the zone and continue that impulsive move bullish. What I love to look for and what I'm trying to incorporate into my trading, and it was part of my problem last week, is I just don't have a lot of experience trading this way. It is a little bit foreign. Is essentially looking for these lows to be printed, trying to get into the market at these lows. Problem with that is I'm typically a candle trader, meaning for the majority of my career, I traded based on solely how a candle looked, and it's very difficult to take buys, take longs when a candle's printing against me. How can I take buys if the candle's bearish, if the candle's red, right? But now I'm starting to kind of change my mindset in, hey, if a candle's red, that means I have the potential to form a new low in order to start trending or trading bullish. So all I need would be a candle in my direction after a red candle, so a bullish candle after a bearish one, a bottom wick, and a continuation for the next candle. So essentially I'm trying to incorporate a 3 candlestick setup, just like so. You get this retest, you get a candle pointing in your direction at a time of interest, at a high volume time, and you can take advantage of that as you can see here, earlier I had my area of interest here. As you can see on the 1 hour, we broke out, we've come back to retest. So dropping down to your 30-minute candle, you have a bearish candle, a bullish candle, one that is suggesting we may not be going down anymore. We are stalling, we actually are showing signs of going the other way. Bottom wick entry, hopefully somewhere around here, depending on your lower time frames as well, and ride to the session resistance or current session highs, with this being your low. Anticipated low for the session, or anticipated low in regards to that structure, and that's what I'm looking for. So you can even forward test this, moving forward this for us, back testing, because this has already happened. So you have this structure here on the 30-minute, and you have this structure here. What has happened? Well, you come up to these zones, you don't have your nearest low is 125 pips away, so you need to dive down to the lower time frames in order to be confident to continue trading. You've waited for this pullback, so now you have a red candle, a bullish candle, and the next one, 30 pip stop loss, and a entry there. You would have gotten 30 pips. You would have come back down. You would have been in drawdown in the next hour. This is a little later in the session, 10:30, so a little later than I would have been trading. But had you held your stops at the low, retest, had you considered that your new session low, target there, understanding that this is the second and third time we are trying to test here, we are bullish, so attempting to form a new extension or a new high, this is where you would start to go, every 50 pips. If our next target was not 29.30, 29.35, etc., you would have got that. You see this retest and continuation, so that is essentially the strategy I'm trying to incorporate. Is if we are needing to retest a broken structured zone, waiting for that bearish, the bullish candle, and trying to enter, on that following candle. So identifying that new session low in order to then extend. Inversely for bears, if we are here on the charts and we're like, okay, we should have respected the 29.20s, 29.25s here, we close below, you have this bullish candle, a bearish candle, and the next one, this is on the 1 hour time frame. As you can see, we're 200 pips away from that intra-session high now, so that's probably would require some entries on the lower time frame, but same principle. If you wanted to put your stops there or current candle, you would have got a nice continuation drive. Let's see how this looks on the 30-minute now. Beautiful. You have this pullback, you have a bearish candle and another bearish candle breaking that low. There's your entry. Stops above previous, again a little high for me, 100 pips, and you get this beautiful continuation. Right, so I'm trying to enter in and around this area. So once I see this pullback at 6, maybe I drop down at 6:30 to the lower time frames. You see this pullback at 6:15 to 6:30, lower time frames, here I am. I have a candle in my direction. Now this is something 50 pips, a little high for my stop losses as well, but you get the idea. Higher time frame of volume, trying to enter around a high or a low being created in order to give me the best risk to reward for the trading session. And that's what it's all about too. I've really been trying to incorporate a little bit more risk to reward trades in my trading. To me, it doesn't make sense always to trade a 1-to-1 or a 1-to, less than a 1. That being said, I have to also understand that I am scalping, and unless I've entered at a confirmed higher time frame, strong support or strong resistance zone, that price moves in waves. Price is going to retest your entry point maybe once, maybe twice, maybe put you in drawdown a little bit. No one ever enters a trade and is immediately not in drawdown. So I have to understand that I have to secure positions as they come and know that I can always re-enter as those waves retest my structure. So that is a little bit of game for you in regards to my strategy. Trying to enter at a low, trying to enter once a low has been formed or a candle printing in my direction in order to take advantage of that next volume candle that I know is going to come through experience, through higher volume times. New York Open, NYSE Open, news events, London Session Open, etc. So that's about it for this YouTube video. To reiterate, $1,640, give or take, on the account to 10,000. So hopefully next week I can bite off a chunk of that amount, have some good trades, sit on my hand, be patient, and also confident in order to execute on the moves that I am predicting to come. Week 3 coming up, week 2 in the books. Thanks for watching. Enjoy your family day. Bob, do you want to say anything?
No,
You plugged the course early, you walked in here, said we're making money, you're good?
I'm good.
Shorty's quiet today. Ciao.